Hey there traders, this is Steve Marty, the market chartist for FX Explained, and our regular weekly MacroWatch update for the week commencing the 20th of July 2022. Restrained risk-on theme continues. Let's first of all kick off by looking at those macroeconomic and geopolitical developments from the past week. Well, the monthly fund manager survey from Bank of America showed that funds' cash holdings are at their highest levels since 9/11. And on top of that, equity exposures are at their lowest level since the 2007-2009 global financial crisis and recession. This should be viewed as a contrary indicator, meaning there is plenty of cash to be put to work with possible moves back towards neutral equity exposure. A more robust earnings season than foreseen so far was typified by Netflix reporting this week they had lost fewer subscribers than anticipated in Q2 and predicted resuming subscribers this year. Netflix shares rose by about 15% last week on the back of that news. The ECB raised interest rates for the first time in over a decade by 0.5%. And they also announced a transmission protection instrument, a new bond buying tool to counter possible surges in borrowing costs, particularly for the periphery members of the Eurozone. UK CPI data hit another new 40-year high at 9.4% year on year in June, above forecasts and up from 9.1% in May. Now let's take a look at the global financial market developments for last week ending the 22nd of July. Well, the S&P continued to push higher in here, having had a strong rebound last week. The basing formation we've been discussing in here reinforcing itself, and we do see further upside risk going into the balance of the month and through into August, through the summer. European stocks also signalling a basing patterns in here over the past 2 to 3 weeks as well. On the yield front, lower yield forces remain intact with the US 10 yield now comfortably below 3% and aiming down to the lows we saw earlier this year. The US dollar index has now signaled the top, having had a surging rally previously. And the euro's trying to form a base in here, having rebounded last week from below parity, now pushing back higher over the past week, back above 102. With the US dollar weakness we've seen, gold is also trying to form a base, rebounding from lows seen in 2021. And oil continues, though, its more negative theme in here, having pushed the prior week down below important supports, had a consolidation last week, but still remaining negative. And copper has tried to rebound, hinting at a possible base, but still the overall theme remains bearish for now. Now let's take a look at the week ahead, the week commencing the 25th of July 2022. Well, we're still going to be closely monitoring for developments from the war in Ukraine. And on the central bank side, critically here this week, we get the FOMC interest rate decision, press conference and statement. They come on Wednesday. Earnings season continues. We get Microsoft, Meta, old Facebook, Boeing, Apple, Amazon, ExxonMobil and Procter & Gamble all coming next week. So big tech very much in focus next week. So let's have a quick look at the run through on the macroeconomic data. We get the German IFO survey on Monday, US consumer confidence Tuesday, Australian CPI Wednesday, along with US durable goods, and that all important Fed decision coming through on Wednesday. Australian retail sales come Thursday with German CPI, US GDP and the US personal consumption expenditure data. And then on Friday we get Japanese CPI, unemployment, industrial production and retail trade, plus German GDP and unemployment, EU GDP and further US PCE data. I'm going to wish you all a great trading week. Please do stay safe out there and I'll be back with you with another MacroWatch next week. So traders, don't forget to catch us on the next FX Explained MacroWatch and all the great content on fxexplained.co.uk.